What's up, guys? Can you guys hear me? Oh man, I see the comments here. Gonna give it a couple minutes. Again, thanks for those of you that are in early. Just want to do a quick mic check, and if you can see the video, okay, we're right on 8 o'clock on the money. Thanks again to those of you that have joined. Awesome. Let's give it another minute. I appreciate you guys coming in early. Um, for those of you that have been waiting, this one I'm not going to take too long in terms of going over the coronavirus stuff like I have before. I will update you on the numbers. Um, but of course, I would like to make this one more, let's say, focused on markets, focused on what I think in terms of the direction of the markets for tomorrow and potentially this week. Kind of recap what I talked about last week and how things have sort of played out with that. And let's bring up the S&P 500 here. This is pretty hilarious in terms of looking back how we kind of called these things, and I can tell you right now, based on how the S&P 500 futures are looking, I can tell you we're probably going to open tomorrow morning at 9:30 Eastern. We're probably going to open around here. Okay. Sorry, I know that's not a straight line, but we're going to open around there. Actually, maybe a little bit lower um, based on futures market, I should say futures limit down. So for those of you that don't know what futures limit down means, that the S&P 500 futures market has, let's just say, like kind of like a circuit breaker for the futures market, and that's 5%. So if the index dropped 5% during futures trading and then it just gets halted, right? This is to protect from an absolute meltdown, kind of similar to how we have circuit breakers during cash markets or live markets, where a 7% drop intraday is the first circuit breaker. That's when markets are paused for 15 minutes and then they resume again. And I think the next one is like 11% and then 20%, right? Don't quote me on the 11% one, but I know 20% is another one. In my time trading in the last 12 years, I have not personally seen a 20% circuit breaker. 13%. Yes, right. I stand corrected. So the first one, 7, second one, 13, and the third one is 20% intraday. Thanks, guys. Thanks, Mike and Harsh, for correcting me on that one. And ultimately, I have not seen one in my time. Again, I'm not counting the flash crash that happened in like 2011 or something. That was just a very, very uncertain, very, very minute time. That was like lasted like 5 minutes. But I'm not going to go into that. The whole point of this is to let's start off with some of the coronavirus numbers, because of course we know that in this market that is front and center. How many cases we have? Are cases going up? Is there potentially a vaccine? Are there certain drugs or medications that are helpful, right? And I'm going to touch on that as well. Again, I'm going to keep it as fact and data based as possible for you guys. So let's kick things off. Again, thanks everyone for joining. I hope you guys enjoy these market recaps. I'm doing these weekly for now. This is going to be the third one, so third week in a row. Because we're in that kind of a time where most people have not seen before, rightfully so, because we haven't had this kind of meltdown. Really, what this is in since 2008, and even then, 2008 looked pretty reasonable, to be honest. So, for those of you that have not attended the last webinar or kind of missed it, to give you a recap of 2008. All right, 2008, we all know, was the financial crisis. If we look at a daily chart here, take a look at the drop, right? We see the bottom being March 2009. So this drop didn't just happen, in a month or two and then start recovering. No, the drop in 2008, the financial crisis, lasted about a year, right? To go from peak to trough, okay, to bottom. It lasted a year, all right? This one, all right, so that was about a 50 something percent drop, all right? Took a year to get to the bottom. This one, okay, from the peak, which we hit about February 19th, to where we are now. In fact, I'm going to include where we're going to open with futures down, okay, limit down 2200. And that's a 35% drop in the S&P 500 in, give or take, to be very precise, we're looking at 23 trading days or so. So that's about 3 weeks or give or take. Okay. And that's a huge drop, 35% in 3 weeks. Okay. Remember, there's 5 trading days in a day. So let's just say 3 to 4 weeks. Okay. Not being super precise, but you get the point. In a month's time, we've dropped about 35% from the peak. Okay, from the peak. You can see the meltdown started, in fact, on the 24th of February, the big gap down. And since then, it hasn't looked back. In fact, I want to show you guys something for those of you that are not too familiar with my indicator. I've hidden all this stuff, but I'll show you guys right now. So this is a look into my proprietary indicator. My students have access to this, and let me zoom in here, and you can see that the S&P 500 on my chart here, on the daily chart, it was given a short signal here. Again, this doesn't automatically mean you go in short, but it gave a short signal on this gap down, all right, at the 3260 level, give or take, all right? And since then, since that indicator gave short, okay, that's my proprietary indicator. Since that indicator gave short, we have gone down, reasonably speaking, about 28% since. And that's not including the futures numbers for now. So if we count the futures number from the time that we got the alert on short, we're going to be about 32%. So the market has tanked 32% since my indicator gave a short. Again, the indicator is not perfect. No indicator is perfect, but to give you an idea what I use in my trading, what my students have access to, you can imagine the powerhouse. Okay, you can see the powerhouse that this is. This indicator is an absolute beast, and my students who take the masterclass get it. All right, so enough about that. Let's continue on. We know that the S&P 500 is going to open around 2200 index level tomorrow morning, and I got some questions. How do I know that? I know that because of the futures pricing. Let's bring up a good resource for all of you. I apologize for the ads on Finviz. So Finviz is a great website that you can use. At the bottom left-hand corner, sorry, the ads are coming up. The bottom left-hand corner is where you have the futures, okay? Oil futures are down about 5% right now. Natural gas, 4%. Gold is relatively flat. And then we have the Dow and the S&P 500, right? These are futures pricing. Again, this is a bit delayed, but we do know that we hit limit down, meaning it hit 5% circuit breaker type of thing, and then just kind of halted there. So you won't see this move anymore, okay? But futures markets do open at 6 p.m. Eastern time, if I'm not mistaken, and then of course go until pre-market, which is 4 a.m. Eastern time. All right, 4 a.m. Eastern time to 9:30 a.m. Eastern time is the pre-market. Okay, not everyone may have access to the early pre-market. Some people may have access from 6 a.m. or 8 a.m. But at least now you know, right, that there is pre-market, and then there's also after hours, which is from 4 p.m. Eastern to 8 p.m. Eastern. Okay, so away from Finviz, let's look at the coronavirus numbers. We know that the S&P 500 is tanked. We know that probably going to open down maybe 5% tomorrow. Let's put this into context. Okay, I've shown you some of these graphs before, but I'm going to show you now. 1 second. Sorry, wrong image. Here we are. Okay, so I hope you guys can see this clearly. Currently, this is updated as of today, maybe a couple hours ago. and we can see the coronavirus numbers or cases are now above 300,000. When I was doing these, when I started the first webinar, this is the third week, so 2 weeks ago on a Sunday, this was below 100,000. Okay, the coronavirus cases is below 100,000. So you can see since then we've more than tripled the number. This is, I don't even know what to say about this. And then look at the deaths. Like the deaths was maybe around 3,000 or something since we started looking at it on the webinar, and now we're about 14,500, right? And of course, the recovered number has also gone up, which is good, but more people are getting it. I said this before, and I'll say it again. More people are going to continue to get it, especially if the morons across the globe do not take this seriously and start doing some isolation, self quarantining, whatever you want to call it. For those of you that are not taking this seriously, you are what the problem is. Okay, and I pull no punches because I am dead serious when I say that it's up to you to do your part to make sure that you don't spread it. Because I don't care if you're 10 years old, 20 years old, 50 years old, 80 years old. It doesn't matter how old you are. You can get it. You can spread it. And because of the ability for this thing to kind of be have a host and the host not knowing for about 14 days, you could be going around, going to the beach, like doing some fucked up shit like that. And you could be putting all kinds of people at risk. So if you do that, fuck you. All right, that's as simple as I can make it. I don't care who the fuck you are. You don't have any right to do that. And it's just a cascading issue. Okay, we look at the multiplication effect, we look at the exponential effect on this, and because of someone's stupidness, thousands, tens of thousands more can face the repercussions. Okay, so if there's ever something in life that was unfair, and I'm not one of those people that says, oh, life's fair. I know life's not fair, but if there's something that is the definition of unfair, it's some 20, 30-year-old fucktard going out to the beach, doing whatever the fuck they want because they think this is permanent vacation for the next few weeks. Yeah, you're the fucking problem. And I'll leave it at that, because if I go on, I'm just going to absolutely lose my shit. So with that said, let's look at something else here. Another chart, I've showed this before. This is just showing you the exponential case, all right? Exponential linear scale on, okay, a line graph showing you the total cases along with the total death. So as I said, we're at about 14,500 deaths so far. This is looking pretty bad in terms of close cases compared to deaths. Okay, it's about 13%. But if we take a look at active cases, all right, compared to people that are going serious or critical, it's about 5%. All right, so the number one example I can give you, which is a terrible tragedy, is Italy, for example. Italy, I look at the Italy numbers and I just, my heart breaks when looking at the Italy numbers, which I'll show you right now. China, 81,000 cases. On a Thursday, I think it was, China had no new cases, but then there were some more cases, right? So they had 46 more cases compared to the prior day. You can see the total deaths for China are at 3,261. Okay, look at Italy. Italy has maybe about 75% of the cases, total cases of China, but they have almost double the deaths. Okay, process that for a second, right? You will need to understand that this is a case where the USA, all right, what can happen to USA, what can happen to the cases in the US may not be too far off, okay, if we go based on, data from Italy. Now, could it be better? Absolutely, I hope so. Where we don't have to go through this, but the way the charts are looking now, the way the numbers are looking now, this is bad. And if people in the U.S. don't start taking this seriously, don't be surprised. Okay, I'm not gonna get you to panic or tell you we're gonna get at this point where Italy is. Don't be surprised if fucking idiots get us to this point. Okay, now I will say Italy obviously has an aging population, has an older population. It's no doubt that this does severely impact people that are older, that have existing conditions. But with that said, don't think and let your guard down that, oh, I'm 20 or 22, I have no problems, I don't smoke, I don't have any issues. It doesn't mean that, you can't get it or it can't significantly impact you. All right, so just be aware these are the top 20 countries I think that I've taken, and of course, USA is in third. We have Spain and Germany, cases increasing. We have more deaths. Iran is also coming up there. So please be careful, guys. Take this seriously. I'm not saying you should panic or freak out, but all I'm saying is be careful. Do your part to self isolate, take precautionary measures if you do need to go out. You're not some superhero. I'm not some superhero. We all need to do our part. Even if you think you're going to be fine, please think about others. Maybe you have family members that are older. Maybe you have relatives that are older, friends and family. So please think about that before you do anything that you think could put others at risk. Okay. Moving back to the S&P 500 data. Okay. I pulled this up before, I'll bring it back up. So this chart you can see is the the chart for this week, this past week. And you can see the market dropped on each significant day. So Monday was a huge drop, okay? About a 12% drop on Monday, 6% up on a Tuesday from there, 6.6% down on Wednesday, Thursday 2% up, and then Friday we closed down 4.5% almost. You can see the whipsaw. You can see the up, down, up, down, up, down. This is what's making it so difficult to trade. Now, some people say, well, Riz, if you're seeing this red, green, red, green, red, green, isn't Monday going to be green? Well, no, I touched on this. This is the issue here. This is what's making it so difficult. We don't know because if Monday's red doesn't mean Tuesday is going to be green, right? And we can see that with Friday being red and then tomorrow, Monday, probably going to be a red day. And whether you're short or not, either it's going to be good for you or it's going to be bad. All right. So again, something to be aware of. The S&P 500 is down about 32 to 30. Now it's going to be 35% if the market does open down another 5% or another 4%. It's going to be down 35% from the top. Okay. To give you another stat, maybe you've heard of it or maybe you're not. Since Donald Trump's inauguration, the S&P 500 has given back just almost all of its gains. So that's since about end of 2016, beginning of 2017 to now, the S&P 500 index has given back just about all its gains. Okay, so again, this is not to make it political. This is not to make it any kind of Republican, Democrat type of thing. Fuck all that. That's the least thing I could care about. Just a statistic for you, okay? So the last, give or take, 3 years have been wiped out in terms of the index level, specifically in the Dow, but even the S&P 500, which is very, very similar. Another chart I want to show you is the updated chart for this. Take a look at this long-term line chart, and if you notice, this goes back to 07, all right, all the way to now. And you can see that we hit about a 56.8% drop to the bottom for the S&P 500. Where are we in relation to that? About a 32% drop, a 35% if you include futures pricing. Compare and contrast that to the drops that have happened throughout the year. Drops 5%, 10%, 15% are healthy. Okay, they're healthy. So when people panic, that have been panicking the last 10 years on any 5, 10, 15% drop, those have all in hindsight been opportunities, because take a look at the S&P 500 rallying, right? Rallying like nothing. Hindsight, obviously, if you bought during these dips, you would be one happy cookie, okay? So understand that markets in the long term trend up. I know it doesn't seem like this. I know right now it's like, oh my God, the world is ending. And I'll touch on that right now in terms of what we can do to kind of flip our mentality and look at it one way. Hopefully it will be something for you to think about. But I'll touch on that shortly. One last chart, okay, data set. And this one to give you an idea. Okay, the S&P 500 off the highs since 2009. Okay, so bear market line here is 20%. right? In 2018, Q4 2018, just ending the year off, the market dropped about 19.7%, just shy of hitting bear market. Okay, and then it just recovered, it hit that V formation. Take a look at where we're at now, comparison, right? So it's all context. People need to understand context. We're way oversold. We're way below the sort of average drop that's happened over the last 10 to 12 years. The average drop over the last 10 to 12 years, I would say, is about 10%. Okay? We're three times that now. So considering the last 12 years, this is one of the worst sell off since 2008, 2009. All right. And that too, like I mentioned, in a very, very, very short amount of time. This is why people are literally panicking. Obviously, there's some of you, I hope, that are looking at this as an opportunity to take advantage, either as a trading standpoint or I would say more beneficially as an investment standpoint. I'm hoping you guys are taking a look at this and taking it to the point where, you know what, there's a silver lining to this, right? But let's get into the charts again. Let me bring up this. I just want to see. Wow. I look away for a bit, change the screen. There's a lot of comments here. I won't get into the comments right now. I will just say that if you are asking questions, um, I didn't say it in the beginning, so I apologize, but I request that you hold off on the questions. If you want to comment, absolutely go ahead. But just hold off on the questions so that way there isn't a consistent stream and then I have to scroll up to get them. Right? We will do a Q&A. Don't worry. I will try and answer every single question. Okay. But going back to the markets. All right. So I've given you an idea as to where the coronavirus numbers are. I've given you an idea as to where the current market is. Now the question comes, what do we do about it? What are we going to do? Right? I have been recommending my students, my elite members, to pace themselves in terms of not just simply buying every single day, buying every single thing that they think is going to be a good candidate. I'm saying to kind of hold your cards close to your chest because, like I said last week, and I'll say it again, there is more downside. And in fact, I drew this white line, believe it or not, last week, and I said if we break, and I drew this one as well, I said if we break the 2400 level, keep an eye for the 2100 level in the S&P 500, and that looks like what is probably going to happen because tomorrow we're going to open around here, right? And then perhaps there's more downside to the 2100 level. Again, I can't tell the future. This is just based on my experience and my insights based on doing this for 12 years. So that's my key area. This is what you can call a key level. Now, many of you will be like, well, Riz, is this support level? I wouldn't really call it a support, to be honest. This is just a level that, based on my information, based on what I do, what I look at, is an area that I'm paying close attention to, just like how I was paying close attention to 2400. It's one of the reasons why we barely did any trading last week. We barely did any buying last week. A couple things here and there, just smaller positions, but not too much buying. One thing I can tell you to look at, I mean, I can't tell you what to do, but what I can say is to consider would be oil. Now, if you want to buy oil, obviously you can buy oil companies if you want, like Royal Dutch Shell, Exxon. If you need the tickers for that, feel free to ask. But one way you can participate in oil, tracking the oil WTI barrel price, right? And that is USO, United States Oil Fund. So this is an ETF that tracks the percentage move of the price per barrel, okay, percentage change. So if the US, WTI, which is the barrel, the name for the price per barrel, and it could be, let's just say we know it was like $22, $24, right? Last we looked, $22, right? It was $22. So to give you an idea, USO at this point, if tomorrow oil goes down 4%, USO will go down 4%. All right, so it's going to track the move of the oil futures market. So in this way, you can directly participate in the price of oil without having to trade futures contracts. So you can see where oil is in relation to where in relation to where it's been in the last few years. Take a look at 2014. 2014 area, USO is up here. What I'm gonna do is bring up the actual price of oil right now via the futures contract. But just so you know, if you want to participate in oil, you want to buy oil per se without having to participate in the futures contract, you can buy USO. All right. I personally hold some. I know I've guided some of my elite members to hold some. Again, I can't tell you what to do, but you can consider that. Let's take a look at price of oil. All right. So keep in mind where oil is right now, $22 a barrel. All right, at $22 a barrel, majority of oil production in the US at least is shut down. Okay, production in Saudi Arabia, in Russia, in other Middle Eastern countries will continue. But at $22 a barrel, U.S. production shuts down because it just doesn't make sense for the shale industry, fracking, oil sands to continue. Just because their costs are higher than $22 a barrel, there's no point in it costing more to extract this stuff from the ground and then selling it for less than what it costs. So you're better off just laying people off. You're better off just not doing anything, right? So this is something to keep in mind. When oil goes to this price, two things are happening. Demand has obviously been destroyed because supply is so high, but supply is high not in U.S. right now. Okay, going forward, because like I said, shale, fracking, and oil sands are going to be shut down. It's mostly the Saudi Arabia, UAE, United Arab Emirates countries, Russia, Venezuela, those guys that are producing, those are the large oil producers. Those guys will continue to pump oil. That's what's caused this tremendous drop in the last 2 weeks. Okay, I remember coming back from my fiance's bridal shower and oil dropped like 20%. This was actually here. Oil dropped 20% in like 1 day right here. Here we are, right? So 23% you can see in 1 day. And then it's just gone lower since then, right? So oil is absolutely oversold. I think oil for a long-term hold via USO ETF is a great play. Again, that's a suggestion for you. That's an idea for you. I can't tell you what to do. And please proceed according to your risk tolerance. The last thing I want is someone to just go all in on oil and then oil goes down like a couple bucks more and they're like freaking out. Okay, this is a long-term hold. It's great. I would avoid the 3 times leveraged oil ETFs unless you know what you're doing. Okay, just my 2 cents. Moving on to a few different things that I would recommend keeping an eye on. The airline industry I mentioned, whether it's Delta, again, it's gone lower, just like all airlines, just like all tourism companies. In fact, Delta is now trading at 2013 lows. Okay, so the price is currently trading at 2013 levels. All right, that's about August 2013 levels to be exact. That's almost 6 years, 7 years, I should say, taken off. Okay, in a span of 3 to 4 weeks. That is brutal considering Delta trades relatively stable in like a channel between 62 area to about 50, 48, 50. So it trades in that kind of channel and it's just melted down. For obvious reasons, I'm not going to be flying anytime soon. The same applies for other people simply because many countries or most countries have just shut down their borders, rightfully so. All right, so the airline industry is in free fall. Delta being one of my large recommendations. Again, same thing applies. Disclaimer: if you're going to trade this or invest in it, proceed according to your own risk tolerance and time horizon. Another one is Boeing. Boeing is not a direct airline, but of course it supplies the airlines with airplanes, whether it's the Boeing 737 and other variants. Plus, Boeing also has a lot of defense contracts with the Pentagon and the U.S. So they are kind of like a two-pronged thing where they're dependent on the airline industry, but they're also a defense company as well. This thing is absolutely melted down and is at 2013 lows as well. So not too far off base considering what's happened with other airline companies. This is a great buy, but there's an asterisk there. Same thing with Delta. Okay, this is a great buy only if you're okay with the with stomaching more volatility, because this thing will move heavily with the market. One, two, they're looking to get bailouts. So same with Delta, pretty much any and every U.S. airlines will try and claw some amount of cash or a loan that they can from the U.S. government, and Boeing is in the same boat. They're all looking for bailouts because of how negatively impacted their businesses. Like, they have no revenues now. Uh, Boeing was already in a bit of a soup with the 737 Max situation, but you could see that it was hitting around the 320 level and then picking up, right? So again, I don't really draw lines on my charts, but for you guys to give you an idea, 320 level was kind of that area where if you picked up Boeing, you'd be at a good entry point. Of course, all that changed in the beginning of end of February, beginning of March, right? So a lot of people have been decimated with Boeing. Boeing is a large cap that's been held in many institutional mutual funds, hedge funds. Same with Delta. So everyone's feeling the pain. Okay. Now, those two ideas are also what I recommend considering. I'll leave the ideas there. With that said, I want to kind of open up the floor to questions. I don't want to drag this on. Hopefully, this is a good recap for you. The S&P 500, to recap, can go lower. In fact, it will go lower tomorrow morning. If it stages a rally or recovery in during the week, I don't know. No one knows. It's also going to very much depend on what happens with the stimulus bill. Just to give you an update, the stimulus bill, which is I think $2 trillion stimulus plan that President Trump and his administration have tried to push forward, that has failed. Okay, that $2 trillion stimulus plan has failed. Let me clarify, in sense that it didn't go through the House. It didn't get approved by the House. And as such, they're going to need to go back to the negotiating table between the Senate and the House, so they can kind of hash out a more feasible plan and one that is more specific. I'm assuming that the House, let's just say, declined the $2 trillion stimulus package simply because it's not specific enough, right? We've heard the last week that perhaps there could be $1,000 checks. I've heard maybe up to $2,000 checks sent out to U.S. residents, U.S. citizens. So again, no confirmation from the administration as of yet. There's still some hurdles, because if the stimulus package is approved, you can consider that to be a positive for the market. Next, I want to touch on kind of the situation where we're at in terms of a vaccine. Many sources are saying a vaccine is going to take at least 6 to 18 months. That's a big divide. Okay, best case scenario, couple months. We are seeing that there's some positive results from some malaria drugs, some malaria vaccine, malaria medication, and some other kind of things that you could combine to potentially subside the I would say the kind of things that people go through in terms of for those people that are affected with COVID-19. So we'll have to keep an eye on that. Remember, any positive news from drug trials, any positive news from stimulus, any positive news from bailouts for the airlines, this will all have an impact on not only that specific sector in terms of airlines or healthcare, but also the broader market. Okay, so we've touched on what I think I wanted to cover in this. With that said, let's go into some questions, right? I know there's some questions I'm reading here, but can you guys, if you ask some questions before now, can you please, copy and paste it in to ask again? So I'll start with, let's see, let's start with a question I have on IBM. IBM has a decent dividend right now. I want to buy more at the 7% yield level. So let's bring it up. Let's do a deep dive here. IBM. Again, just with every company, unless it's some kind of pump and dump vaccine play, everything is down. So IBM is no different. IBM has had a big sell-off. Again, is IBM susceptible to their computers getting coronavirus? Absolutely not. But of course, it's selling, right? Everything's selling off. It doesn't matter. Funds dump it, investors dump it just to take money out of the markets, no matter what they hold, and so that they can hold cash. We've even seen gold drop, right? So to give you an idea, from the peak, just in the beginning of February, IBM has dropped about 40%. So for those of you that say, I want to buy on discounts, I want to buy when things are on sale, I want to buy during recessions or bear markets or crash, you're looking at one in individual companies. You're looking at crash level pricing and individual companies. Okay, so if you want ideal entries, you can start gradually scaling in, knowing that yes, this stuff can go lower, but doesn't mean it's going to zero. Doesn't mean it's going bankrupt. Doesn't mean it's going to be evaporated into nowhere, like some crypto or even forex. Okay, so keep in mind that there is no specific method or way to pick the bottom. Okay, many people have tried. I don't know any single person, whether they're a billionaire hedge fund manager or some paper trader. No one can pick the bottom consistently. So if you think you want to get in, IBM's current dividend yield, you're right, is just shy of 7%. I would not buy it based on the yield. I'd buy it based on what the company is. And at these levels, it's, I think, a good buy, so long as you're able to kind of gradually scale in, right? I'll give one final insight on scaling in for those of you that are on. I would buy systematically. So what do I mean by scale in? I use this word all the time, and I realize maybe not everyone understands what I mean. So to clarify, scaling in means having a small position to start and then seeing where the price goes. If it goes lower, you buy some more, right? You don't buy the full amount that you would have bought normally in one go. You're essentially averaging in. This is called dollar cost averaging, gradually buying in, scaling in, many different terms. Okay, so I recommend taking a starter position if you have the ability, you have the capital, you have the time frame. Okay, this is an amazing time to be an investor. Even in our elite trading group, we've kind of switched our hats from trading, swing trading, to more investing. Okay, and the reason that is because you're gonna get the most bang per buck. You're gonna get the best, I would say, value having a longer time frame in this environment, right? In our elite membership, we've been trading short term all this time since February, end of February, but now we've widened our time horizon and we're now waiting for things to kind of bottom out, because the last thing I want to do is have everyone kind of put into these trades and then capital's tied up, right? So I'm thinking about it from multiple ways. For me, I continue to keep scaling in because obviously my capital amounts that I'm able to risk and put in the markets is quite different from most. But yes, to answer your question, whoever asked that, good idea on IBM if you'd like, scale in and kind of average in. But remember, don't go too heavy on a single position because there's many opportunities. All right, 1 second, bear with me. I'm gonna look up other questions. Ooh. Sorry. Okay, after the IBM question, someone asked, will the bailout affect the stock price? Eric asked that question. Good question. Yes, bailouts will affect stock prices to the extent that it will show that the government, okay, the U.S. Treasury, the Trump administration, Congress, the House, the Senate, is open to injecting cash either directly or in the form of loans. And we saw this back in 2008 with the banks that survived. All of them were actually forced. I don't know how much studying you guys have done on the financial crisis, but all of them were forced to take a bailout, all the investment banks at that time, so that it was even. Even if they didn't want it, they were still forced to take it. And that was a loan. Remember, a lot of people got upset that, oh my God, we're giving Goldman Sachs, 10 billion, whatever. And, these guys are getting free money and, it's taxpayer money. You're right, it is the taxpayer money, but the government actually gave them a sizable chunk in cash as a loan, which they made back on interest. Okay, this is something that a lot of people don't know. So the same thing I think would happen with Delta, Southwest Airlines, United, all these kind of companies, and maybe even Boeing. Okay, so that's my take. Would that affect the prices of those companies? Absolutely. I think positively. Would it impact the broader market? I think so as well. I think that would be a bullish type of news catalyst because, like I said, the markets are looking for some kind of stimulus, some kind of bailout or cash injection, either in the form of payable loan or just simple cash, which I doubt they're going to give. They're not going to give any public company just, hey, here's $5 billion, have fun. No, I think they're gonna put obviously limitations on what they can do in terms of paying it back on the term and the interest. Plus, we've also heard, limitations on potentially buybacks. There's a lot of political pressure on these companies that take bailout money to not do any more buybacks because technically they're doing buybacks with government taxpayer money. Also, maybe even halting dividends, right? So if Delta gives at the last check now about a 7.5 yield, you can bet your ass if they get a bailout, gone. Dividend is stopped. Okay, and I wouldn't say that's a bad thing. I think the market's already factored that in. So hopefully that kind of answers your question. Another question. Thoughts on Netflix? Netflix is wow. Who would have thought Netflix of all things would be sort of a coronavirus hedge play? Again, it's dropped, but nowhere near where other things like Apple or IBM or McDonald's even has dropped, right? So to give you an idea, Netflix, when all this kind of started at the end of February, is right now down 15%. Compare that to something like McDonald's, okay? McDonald's, all right, guys, McDonald's, like, wow, it's down 30%. And it's a little bit of a recovery from the last couple of days. And of course, we know IBM down nearly 40%. We know Delta Airlines down about 50%, stuff like that, right? I mean, I could go down my list and it would be a similar case. Many companies are down between 30 to 50% from the highs, right? Intel, about 32%, right? Even like we have some of these healthcare companies, right, that have dropped quite a bit, like Johnson and Johnson. Like, you think people are going to stop buying shampoo or all that kind of stuff? No, they're down 22%, right? Facebook, from my thoughts, is like more people will be on Facebook, more people will be on Instagram, but this thing's even been leveled, right? 32%. So to bring back to Netflix, sorry, I go off on tangents. What do I think about it? I do not hold it. I am not a buyer. I'm not shorting it either. I'm just kind of staying away from it. I often pick and choose my trades or my investments very, very meticulously because every dollar I apply to a single company, whether it's Netflix or something, I may not be putting it towards something else. So if I find that there's better opportunities, which I think there are, I wouldn't put it in Netflix. So that's my reason. Doesn't mean that it couldn't be a good trade to buy this right now. It could be because, it's holding firm. It has what we call a good relative strength compared to the S&P 500, right? The S&P 500 has dropped 35% since this all started. Netflix has dropped 15%. So you can see it has a good relative strength. Okay, that's another thing that quantitative investment firms and traders look at. So hopefully that helps and gives you some insights on that. Next question, what happens if you buy stocks of a company like Delta and they go bankrupt? Your investment goes to zero. Okay, that's a simple answer. How long do I see before we bottom out? I appreciate that question, but it would be unfair. It would be stupid or outright, I would say, negligent for me to say a specific number because it would be coming right out of my ass, just like anyone else that gives you a number. Other people who are big fucktards will just want to say whatever suits them. We'll give you some kind of number maybe, but I don't feel like giving a number because I don't know. And in fact, no one does. So, that's the accurate answer. The accurate answer is no one knows. You just have to try and scale in if you want to take advantage of these drops, or maybe you want to just sit on cash and just monitor the situation from sidelines. I can't blame you from doing either of those. Another question is, someone asked me PFE. What about it? You got to be more specific than that. I think PFE Pfizer is a great company. It's not going anywhere. I think it has tremendous upside. In fact, I own some right now. So that's up to you. Someone asked me cruise lines. Yes, cruise lines are another one that have been beaten down. I'll just bring up one, which is Royal Caribbean. And this is at like 2012 lows, right? These cruise lines and airlines have been absolutely decimated, followed by hotels, right? Hilton, Marriott are another that you might want to consider. They're down about 50% from the peak, right? 45% Hilton after Friday's recovery. Marriott probably going to be similar, right? About 50%. Yeah. So that's another idea. Do I think cruise lines are a good buy? Yeah, if you have the risk tolerance, again, they're in a kind of a pickle right now because no one's going to be taking cruises for some time. So what are they doing? Those big ships, those big cruise lines are just sitting there, right? And they have a cost to that. So just be aware of that. What signals or experiences give you an idea that the S&P 500 will touch 2100? That's a very tricky question. 12 years, I would say. 12 years. 12 years of eating, sleeping, breathing this stuff. 12 years. That's what it takes for me to come up with that number. And I do this often. For those that follow me, that are in elite or know me quite well, know that this isn't the first time that I've given some kind of level. I did that back in 2018 with Bitcoin, and different levels for oil and gold. But either way, it's just, without going into it, about 12 years of experience. I mean, some people do this for 30 years, 40 years, and still can't get it. But everyone's different. Thoughts on Air Canada? Same concept as Delta. Again, I'm not going to touch on specifically Air Canada. Again, same concept as Delta. They too are in trouble. Now that's going to depend on the Canadian government extending capital if they do. Someone asks, again, I've already touched on RCL. So, Roberto, I think that answers your question. Trump stated in his speech that cruise ships would get covered. It didn't specify which one, but so essentially, I think what this question is saying, that they may also support or bail out or give a cash injection to cruise lines, probably, right? Someone asked difference between USO and UCO. UCO is 3 times leveraged. We hold UCO. Obviously, the trade has been decimated simply because it's 3 times leveraged, bullish. So just like USO, except 3 times the move of oil, right? If oil price drops 5% tomorrow, UCO will drop 15%, right? And I'm not going to get into the whole math behind the decay, but any leveraged ETF, whether it's for oil, gold, the index, anytime you hold it for too long, you're going to get a big amount of decay. So even if you hold it too long and the actual underlying, which in this case is oil, is recovering, you may not see a one-to-one kind of recovery in your holdings, right? So I can tell you right now, and I said this in Elite, the UCO holding that I have is down huge because I didn't expect, or no one expected, a 20% drop in one day and then another 20% drop a week later. So that's unprecedented. We haven't seen that since early 1990, early 1991, which is before I was born. So it's a fact that when I say I haven't seen it, or most of us haven't seen it in our lifetime, that's the truth. So going to the next question, negative interest rates. There's credit specialists that can't answer that for you. I can say negative interest rates were not there in the U.S. I'm not a fan of negative interest rates. They've implemented them in countries like Switzerland, European countries, different ones. They don't work. They haven't worked. I don't think they ever will. I'm not going to get into the nitty gritty of it because it's a very complex topic. Let's just say God help us and God save us from negative interest rates. Uh, Another question: do I see 1800, the S&P 500, the next support after 2100? Good question. Yes, 1800, 1900. I haven't mapped it out, but yes, give or take, probably if I just have to really just think about it on top of my head. Okay. Someone asked me Colony Capital. What's the ticker for that? CLNY. Yeah, no, I'm just no, not even gonna bother looking at that. It's just no point. Just by looking at it, hard pass. Uh, Space and Tesla. Space. No, no, we've shorted this many times. It's absolute garbage. It deserves to be at $5 a share. End of story. Tesla is an interesting one, um, because, well, why the fuck not? Look at look at this chart. sorry, sorry. I have to have these kind of funny moments here. um, Tesla is actually getting to that point based on their previous delivery levels, based on their product pipeline, based on the funding that obviously did a share offering of I think about 3 billion, and Elon Musk himself bought like $10 million worth of that. So based on everything that happened up until this meltdown, Tesla was way too overextended. Okay, if we factor in the meltdown, what's happening with factories shutting down, with what's happening with demand, because China was a big demand center that obviously is kind of like the ground zero of the coronavirus, and obviously Tesla opened a factory there not too long ago. That's been shut for the time being. So honestly, Tesla I would consider at 300. It rallied because one of the brokerages, I think on Friday or Thursday, upgraded it. Fuck, I don't know why, but it I think is a good buy around the 300 level. Okay, it's kind of rallied since 360, so I mean it didn't really get to the point where I thought it would be a good buy, so I'm holding off. That's my thoughts. Wendy's. Someone asked about Wendy's. I mean, you're telling me to buy it, or you asked me about it. I'll just leave that there. Does Elite include Alpha? That's a good question on what the two services. So the Elite membership is separate. It's active trading more so. Alpha is also completely separate. That's more for long-term investing. So if you join Alpha, you get to see a portfolio of high-quality companies to buy. Not just for this coronavirus meltdown, but in general, right? It's for long term. So those are two separate services. Do I think UCO will go back up over $10? That's a big ask because in order for it to go back above $10, we're gonna need. I think it's trading at 2.5 or something right now. 2.26. Wow, close enough. So in order for it to go up to $10, think about it this way: oil would need to rally 100% from here on out. So oil would need to go to about $45 really quickly for it to go back to $10. And the longer it takes, okay, the longer it takes and the more up and down there is, the worse the trade will be. That's the issue of holding these leverage products. And I know we hold them, I hold them, I'm down big. Like I said to you guys at Elite, I'm in the trenches with you guys. We're going to get some wrong, and I own my wins, I own my losses as well. So this one going back to 10 is a tricky one. Can it happen? Absolutely, but we just need it to happen sooner rather than later, because even if oil gets back to about $45, this trade can still be in the red simply because of DK. And again, I said I'm not going to go into DK because it's a lengthy topic. It's not too complex, but it takes time to explain. So for time's sake, I'm going to leave it at that. Okay. Thoughts on cannabis stocks? Nope. Just don't even fucking touch it. Don't even fucking bother. Like, they're gonna rally probably now for a bit because like everyone's home and everyone wants to smoke. That's not reason enough to buy it. I mean, I don't know. I haven't traded cannabis for some time after it went full moronic back in 2018, 2019. Make money off the people that are just buying it on hype. I made money off of it. Done. On to the next. Um, Someone's asking you Dow. So is that the leveraged? Yeah, it's the leveraged Dow. I mean, it's the broader market. It's gonna go with the market. I mean, if you want to buy leverage stuff, that's up to you. Just be aware of the risks. Um, Amazon. I'm glad someone mentioned this. And actually, someone mentioned Square. SQ. Square. What the fuck? SQ. Square is great, actually. Square is great, trading at about 2018 lows. Great company in terms of what it provides, the service it provides. Of course, it's taken a hit because obviously it caters to small businesses. Small businesses have obviously been slammed, whether it's small restaurants, mom and pop businesses, so on and so forth. So, I think this is a great company. It's very much going to depend on how the economic environment goes because if there is a lot of layoffs, if the economy cools off, guess what? Square is going to go lower. As a company, it's great. Just be prepared to see that their next quarter and the quarters after even are going to be hit. And of course, the market has priced that in to a certain extent. But it can go lower. Can go lower. It's going to go lower with the market if the market does. Next question, Amazon. Glad you brought this up. Amazon is one of those companies that has also done decent, not the best, but decent during this meltdown because, uh, you know, think like kind of like Netflix, they've been kind of a decent hedge because they don't have any physical interaction to buy products from them, and of course, since people are not going out to Walmart, Target, wherever, to buy physical stuff, they're gonna probably be forced to buy from Amazon. So this really plays well into Amazon's hand. Now, am I buying it at this price just yet? Not quite yet, right? I mean, I would like to see it taper off more. I still think it's a great buy for long term, but just for me, I'm not an investor in this for now as of yet. I'd like to see the situation kind of shake down a bit further. Now, someone's asked me if Fibonacci retracements accurate in trading. They can be. It all depends on how you use it. Majority of the people don't know how to use it. There is no precise, I would say, number on how accurate it is. It's gonna depend. Some people use it as levels of for support, resistance, or areas where it can go next. Um, I don't use it too often. Maybe once in a while on a S&P 500 chart or something. Okay, what do I think about REITs? REITs are great for long term. Again, REITs, there's like thousands of different REITs. You have to kind of do your due diligence on which one to buy. Um, in terms of Wendy's, Wendy's is another one that is kind of like in the same boat as McDonald's. It has about a 4.5% dividend yield. Uh, so to consider, it's very much kind of like McDonald's. If I had to buy one or the other, I'd personally buy McDonald's. Okay. And someone is asking thoughts on AMD. AMD is done relatively well to hold off the big meltdown. It's down about 30%, but for something like this that's up so significantly, it's not too shabby, right? AMD at 39 was at one point like, oh my God, like how is it at 39? And the fact that it's just at 39 and it hasn't gone down in like the 20s, it's quite impressive to me. AMDs are good for long term, especially since they've taken quite a bit of market share from Intel. Again, it's all going to come down to how the market moves. Semiconductors are a good, I would say, indicator on how potentially the market could do without going into too much detail. So NVIDIA, similar story, great. Intel, NVIDIA, AMD, and MU Micron would be like my top four companies to consider if you want to have exposure to semiconductors. Okay. Biomed stocks a good play. I mean, I'm not really following too many. If I'm looking at healthcare, I'm looking at the top ones, right? Disney is a great buy, I think, for long term. How you get in and what level you get in, and whether you scale in, that's up to you. But it's a great buy for long term. Disney's not going anywhere. Their theme parks are obviously closed, Disney World and so on. but that's not going to be a permanent thing if we get out of this coronavirus debacle, right? So that's my thoughts on Disney. Again, so many opportunities. Like the webinar would be 4 or 5 hours long if I had to run through the opportunities that are out there, right? Like take a look at Merck, right? Take a look at Cisco. Whoops, Cisco, right? Take a look at even Nike to a certain extent, right? Is a solid buy. I mean, we have so many different companies that have just been demolished, demolished just because of this, coronavirus. Even Starbucks is a great buy, I think, right now at 58 level, right? When everyone was like hyping Starbucks because it was doing so well, especially overseas and China and stuff like that. Well, obviously it's gotten hit because of it. So those are some ideas for you guys. Hopefully you all sort of liked this week's focus on the markets and not just I kind of took away from the coronavirus stuff, less coronavirus stuff, and more market talk. Microsoft, same thing. I mean, all of these. There's really Coca-Cola is good too. You can't go wrong with large blue chip companies, right? Barring Boeing and stuff like cruise lines and airlines, those and hotels. That's the risk sector. Okay, that's the risk sector. There's many blue chips in there, but that's the risk area. Outside of that, the blue chips, Microsoft, Apple, Coca-Cola, IBM, Intel, Google, Amazon to a certain extent, Facebook, they're all amazing opportunities that I think a year and a half later are going to look back. Maybe you'll remember this exact webinar and think, wow, I recall entering or joining this webinar, this YouTube live with Riz, and this kind of gave me an idea or a tip off to just enter and for the long term, and I've made out like a bandit. So hopefully that's the scenario going forward. I would consider all these companies. If you have questions, reach out to me on social media. I mean, in the description in this video, you can get access to my email, kind of some of the stuff that we offer. Take a look at the masterclass. I can't tell you guys how important it is to take that. I don't want to pitch it, but I can't tell you how important it is to take that in a time like this. I mean, to the extent that if you are interested and you reach out to me in this time, I'm willing to, drop the price because I want you to take advantage of this. Whereas many people are price gouging and doing all kinds of fuckery, I want to, make it as easy as possible for you guys to learn and take advantage of this time. I know the financial situation for everyone can be quite up in the air, and I understand that. But anything I can do to make it easier to take, lighten the burden, and learn, because it's about 15 hours worth of training, and there's many guys that have taken it, and some of them are probably in the chat here as well, and they can kind of, vouch for how important and useful it's been in their trading, because you're going to save a lot of money in the long run just by not repeating some of the mistakes you're going to make. So that's that. That's my 2 cents. Hopefully you guys have liked it, enjoyed it. Thanks for turning up. Thanks for your time. Stay safe out there. Like I said, limit the exposure to others, to outside. Not because you're gonna spread it, just because you don't want to take the chance. You don't want to take the chance for yourself and your family members, but also the others out there, right? We need to do our part to flatten the curve, which is, bring back the moment that curve, that line of new cases and deaths starts tapering off and leveling down. I bet you markets will start rallying. Okay, you can write that down if you want. And am I saying it's going to go back to the all-time highs in a very, very quick amount of time? No, but you will see a pickup. You will see a pickup. You'll see a pickup with stimulus. You'll see a pickup with some bailouts. You'll see a pickup with flattening of the curve and a decrease in cases like we see with China, right? China has obviously less cases, where it was hundreds and thousands of cases a day. Now we're at double digits, right? So this positive, we just need to hunker down. And I've said it to my elite members. I've said it on social media. I'll say it again for those of you on here and that watch the recording. This is my request, if President Trump's watching, I mean, probably not, but if President Trump's watching, or anyone who's on this administration, please consider doing a full lockdown. If you're anyone in Congress or Senate, or if you are a representative of your community, of your country, of your city, please, it is my request to you to do a full lockdown. It's going to be painful. Obviously, it's going to be hard for people to just be in their homes and, not have a chance to go out. But I genuinely think, and so do experts, medical experts, think that that is what is needed. If you're wondering why China only has double-digit cases a day, um, you know, as opposed to thousands not too long ago, it's because they were able to stamp this down. Because China is more of a communistic, capitalistic country where the citizens are always thinking about all of them as one instead of each of their own, kind of like how we think in US and North America and Europe, where we all are looking after ourselves. In China and different Asian countries, they're very much, willing to do what's right for the greater whole. And, we've seen Chinese officials take force in terms of making sure people are inside, people are not coming out to mitigate this stuff. And I'm not saying that's what we need to do. I'm saying we need to voluntarily stay inside, do our part, and if this means that there's martial law, if there's a law or some kind of ruling in place where you're supposed to stay inside for 2 weeks, 30 days even, and if that means the government will utilize the armed forces, so be it. So be it, because I'm telling you guys, this is mission critical. I have never in my life been through a pandemic. I hope I never have to. I hope we all get through this. I've never seen a 35% drop in a market like this. This is ridiculous. In fact, I've even said on public to my elite members, I've said if they need to, they should shut markets down, shut everything down, shut everything down. I mean, essential things like hospitals, the police station, fire station, the defense systems, pharmacies, and of course certain essential stores should be open. Everything else, shut it down. Shut it down, because if we have people going out playing basketball, if we have people going to the beach, if we have people doing God knows what, it's only going to keep this ball rolling. I am a genuine believer in ripping the band-aid off and letting this shit subside, so that we can get over this. And one thing I want to touch on before I go, one thing I want to touch on before I go is, sorry, I just saw the chat. Sorry. Just think of it this way, and I mentioned this earlier. My final thoughts, because we're past an hour now, and I appreciate your patience. My final thoughts are: invest for the long term, learn how to trade and invest for the long term, because this opportunity, I guarantee you, even if the market goes 5% lower, 10% lower, fuck it, I don't care, because it's just the opportunity is only getting sweeter. If you have capital, if you have the risk tolerance, there's no way you do not come out on the other side benefiting and profiting from this. That's my promise to you. You just have to be able to take that risk and hold the fuck on. Okay, because let me phrase it this way. All right, if humanity doesn't come out of this, okay, how it's supposed to, if we lose a recurring 3% of our population globally, if this continues to go and we don't stamp this out, what happens in the market is not going to matter. We're going to be in a whole different situation, a whole different ball game, like we've never been in before. So the markets won't even matter at that point. But if we can get a vaccine, we can keep, people doing self-quarantine and self-isolation and social distancing, and we can keep people from being, the ones to kind of spread it and mitigate spreading. The U.S., the world can come back from this, come back stronger, and as a proxy, so can these amazing companies, and so can the U.S. market as a whole. So the way I look at it is, if I'm putting a metric ton of cash and money into the markets systematically, I'm okay with knowing that either it's gonna all go to nothing, 0.0001% chance, but it's either gonna go to nothing, and at that point we're all fucked anyways, or it's gonna rally and it's gonna come back. So you're essentially betting on humanity succeeding and coming out of this by investing in the stock market. So think about it that way, frame it that way. That's my 2 cents. Hopefully you guys enjoyed this. Again, I do this, just because I'm passionate about it. And so if it can help one person, I consider this my job done. So, enjoy the rest of your night. Be safe, be healthy. If you ever want to reach out to me, have any questions, by all means, I've made myself as available as possible throughout this challenging time, whether it's markets or whether it's life, right? So I've made myself as available as possible. It's a big burden. I think we all carry, and I would say me specifically because I kind of see myself as someone who needs to make the right decisions so that others can benefit, and because many of them are reliant on me to kind of guide them. So I take I would say I carry a lot on my shoulders, right? So with that said, I take that responsibility very seriously. And again, thank you for your support, everyone. Thanks for joining. Have a great rest of the night. And if I missed some of your questions, I apologize. I mean, there's a lot, but if you have them, you can always message me afterwards. Take care. This recording is going to be recorded, has been recorded, and it will be up on YouTube. So if you want to share it with other people, please do. Please don't forget to subscribe and follow us on social media. All right, take care, guys. Bye.